In today's video, traders, we're going to talk about RSI divergences, which is a heavily requested topic inside the VIP team. We've been talking a little bit about this concept, and it was time that I made a video on RSI divergences. So what we're going to do in this video is we're going to talk a little bit about how you can spot them on the charts and how you could potentially trade an RSI divergence. If you don't know what that is, don't worry. We're going to get into that video and ways that you can trade this concept, getting into it right now. So hello, ladies and gentlemen, welcome back to my channel. My name is Nick, also known as Trader Nick. I make all sorts of currency related content here on YouTube, as well as just general trading concepts, strategies, price action topics, all sorts of stuff and research that I'm doing in the markets. So if you're new here, I do ask if my stuff is helpful to you. Make sure you subscribe down below and give this video a thumbs up. It helps to grow the channel and to get this video to more people. So we're looking here at Euro USD. We're looking at the 1 hour chart, and we're going to talk about the RSI, or the relative strength index, and what an RSI divergence is, and some ways that I like to look for potential signs of a reversal using this concept. Now, RSI divergence, what we have down here is we have the RSI. Now, if you don't know what the RSI, this is the relative strength index, and I'll put the equation here on the screen so that you can check that out. But essentially, the RSI is going to track kind of the strength of a market's move. Makes sense in the name, right? Relative strength index. It's going to take an X number of bars or candles and look at how strong the market is moving. Now, I use the RSI 7, as you can see down here. This is the RSI 7. Now, different people are going to use different numbers. The standard or the default one is 14, right? So it's a 14 RSI, but I have it set to 7 just because I think it's a little bit more quick, a little bit more what I like to use. Now, it's not necessarily better or worse than the others. That'll come down to how you test and how you like the indicators that you're going to be looking at. And before I go any further, a lot of times people say that you should never look at indicators and that indicators are a total waste of time and you should only look at price. But here's the thing. Whenever somebody tells you you should or shouldn't use something in the market, always take it with a grain of salt and go test it for yourself and see if you think that that's the correct thing. Because sometimes people will say you shouldn't do something, but sometimes that's actually a pretty decent way of doing things. In fact, if everybody is doing one thing in trading, most people lose money in trading, so maybe it's worth experimenting with the things that people are not using. So we have the relative strength index down here. You can see down here, this is the RSI plotted at the bottom half of the screen. And you can see that the RSI goes from 0 to 100. A 100 reading is indicating that we have an overbought, or anything over kind of 70 is considered overbought by default, and anything under 30 is considered oversold. Okay, so with that said though, we're not going to use the RSI in this case just to buy or sell just because price has gone oversold. I mean, in this case, it would have been a beautiful buy, right? And in this case, it might have been a decent sell, but it's not always so perfect. We're going to be talking about ways that you can spot potential weakness in a trend using the relative strength index. Now, this is a really cool concept, and I'm really excited to talk about it further. And again, we have the Euro USD here on the 60-minute chart, or the 1 hour chart. And what you can see here is price is moving very, very bullishly. For the most part, this is just a straight up uptrend, right? In fact, if we get a trend line out, what you can see is if I grab a trend line, you can see that if I just draw this concept, you can see that price is moving very, very bullishly. And for the most part, a lot of times people would be saying, you know, you should stick to being long here on this particular pair due to that nice strong trend. But let's take a look at what the RSI has to say. Sure, the overall strength is up. You can see price is moving oversold here, pulls back. It's pretty healthy. Nothing really too significant. But take a look at something here. This is really what I want to point out, and this is where we get our first instance of a divergence on the oversold readings here, as well as the uptrending market. So if we look at price is moving up, right? We're trending up and we're putting in higher highs and higher lows. But if we look at the RSI down here, guys, take a look at this. Take a look at how the RSI in this case is actually printing some lower highs. So if we look and we line this up just on the price as well as the RSI, if we take a look and let's make this, let's make it white, right? You can see that we're putting in higher lows here, higher lows along the actual price. But if we look at the RSI, guys, it's disagreeing with the current price. And this is really where the concept of an RSI divergence, or difference from the current price, comes from. You can see that we have a higher high here. A higher high here, and we have a lower high if I get this pin to work, a lower high here and a lower high here. Notice how that is starting to trend down while the price is actually trending up. And this is where we get a divergence, guys. And now what's interesting here is you can see that the price is saying one thing, but the RSI is disagreeing with that. So the price is saying up, but the RSI is actually saying down. It's showing weakness is potentially coming into this market, and that the RSI is printing lower highs, which may signal some weakness in this bullish uptrend, which with hindsight on our sides, we can see that the market did in fact roll over. So this is saying up, this is saying down, and you can see that that disagreement, when one is saying one thing and the other is saying a different thing, can sometimes lead to a major reversal. And in fact, that's exactly what we got on the price. So we saw price heading up, and the RSI was signaling that things were looking pretty bearish on the strength side of things. So we had a weakening trend to the upside, and sure enough, there was some sell-off here. Well, that's great and all, but how do we actually trade this? Well, this is where RSI divergence to me is really, really interesting. It's not necessarily a perfect timing indicator, because you can see, even though there was a price disagreement here and here, right? There was still some time before the market actually got rolling over. So there's a couple ways you can use this information to your advantage now that you know how to spot RSI divergences, right? So really with an RSI divergence, all we needed was two trend lines. We needed a trend line on price as we got here, and we needed an RSI kind of trend line down here. Right, and we can see that this is pretty objective. We have a lower high being put in from the RSI, and we have higher lows and higher highs being made on the actual price action. That's where things get really, really interesting. Another way that you could draw this on the price is you could just use the highs, right? So you do have higher highs and you have higher lows. Same thing on the, or inverse kind of on the RSI divergence. We're just checking the highs here to see if they're becoming lower highs. So that's one way to spot it, right? So we have major movements to the upside and we have movements to the downside on the RSI high points. So then price decided to roll over, but again, it's not necessarily a perfect timing indicator, because even right here, right, that's where we really started to see that RSI divergence. And even still, price didn't roll over immediately after. It was a little bit later that we saw price trail back higher and ultimately dip down, right? So it's not going to be a perfect indicator just because you have RSI divergence. Just because this starts to plot on your chart doesn't mean that we're immediately going to see a massive correction. But what it does tell me, and one way that I like to look at it, is it gives me a bias. It says, okay, if I'm long on this pair, maybe I hold the horses on buying any further and I close out some of my long positions, and I maybe even start looking for potential sell opportunities or even breakouts. So one way that you can trade RSI divergence that I've seen people do is that they wait for this trend line that we've drawn to break structure in favor of the RSI divergence here. That's where things can get really interesting. For example, you could take a sell trade here, you could put your stop loss maybe, some distance here, and you could target a major structural level like this, right? Something like that. So that's one way that you could trade using an RSI divergence. Now, an RSI divergence is mostly for me a strength indicator of a trend. So it can tell me when a trend might be becoming weak. On the contrary, we actually have some signals of a strong trend as well using this same concept. Take a look here. You can see that the RSI was actually putting in a healthy series of higher highs, just as price was putting in a series of higher lows and higher highs, right? That told us here that the price was in a healthy uptrend. And so we saw some continuation, but then things started to change in this section of the chart where we saw price start to move to the upside, but RSI was saying something different. When these two things disagree, that could potentially be an early warning sign that the trend may be getting ready to reverse and that we could trade the setup or the major break of some sort of trend line or some sort of significant support or resistance level. So tying RSI divergence with some sort of technical setup that you like could be a really good way to improve your edge and improve your entries if you're going to be trying to trade reversals. This is always going to be not a simple thing to do, but an RSI divergence might give us a little bit of a heads up. Let's go forward. I had one more example I wanted to show you guys that I spotted here in the chart. You can see that as price comes up into this area, if I can find it, here's the other example. You can see if I just bring that down, you can see price was moving to the upside here again. and the RSI was disagreeing. So now at this point, you're probably a pro at spotting these, and you can see that price was trending up on the actual price, right? But on the RSI, we were getting a series of lower highs. And this was significant in the sense that now we're seeing a disagreement between these two factors. We have a bullish move on the price and we have a bearish kind of indication or early warning sign on RSI. And sure enough, we saw price move up for a little bit longer before ultimately selling off and reversing and starting a new trend. Again, this is just something that you can use in your toolbox and in your trading strategies. You can look for potential confluence and use it with other technical ideas that you have. Hopefully this was helpful to you. If it was, please give the video a thumbs up down below. Thanks very much, and we'll catch you next time.